Hey, everybody. It's Buffy the Rate Slayer here with your weekly market insights straight from the Capital Markets Trading Desk, right here at SunWest Mortgage Company, where I break down the market so you don't have to. Let's get into it. Markets had a bit of a mixed week, but overall, investor sentiment stayed fairly steady. Now, a big reason for that was easing geopolitical tensions and lower oil prices, which helped take some of the pressure off of inflation concerns. On the flip side, a pullback in major technology stocks briefly weighed on the market and made investors a little more cautious. But by the end of the week, things turned around as tech stocks bounced back and inflation worries eased once again. So the main themes haven't really changed. Investors are still keeping a close eye on inflation trends, central bank policy expectations, and the overall outlook for economic growth. Now, let's talk about the consumer because spending remained surprisingly strong in May, even as prices continued rising at the fastest pace we've seen in more than 3 years. The Personal Consumption Expenditures, or PCE price index, increased 0.45% in May and 4.1% year over year. That tells us inflation is still running hot, but consumers continue to spend and support the economy despite ongoing financial pressure. Turning to the labor market, conditions remained relatively steady. Initial jobless claims fell by 12,000 to 215,000 in the week ending June 20th, coming in better than expected. Continuing claims did rise by 21,000 to 1.82 million in the week ending June 13th, but they're still lower than they were during the same period last year. Overall, that's another sign that the job market remains fairly resilient. When it comes to housing and mortgage rates, the picture was a little mixed. The MBA mortgage applications index rose 1% in the week ending June 19th. Purchase applications declined 0.6%, while refinancing activity increased 3%. As for rates, the average 30-year fixed mortgage rate edged down slightly to 6.59% compared to 6.6% the previous week. So while borrowing costs remained elevated, they've been relatively stable. In May, new home sales fell 7.3% month over month to a seasonally adjusted annual rate of 580,000. That's the second lowest level we've seen over the past 12 months. Higher mortgage rates and ongoing affordability challenges continue to weigh on buyer demand. The slowdown was most noticeable in the West, where home prices tend to be the highest, but there was also softness in the South, which remains the largest housing market in the country. So, what's the big takeaway? Well, the economy is still balancing a few competing forces. On one hand, consumer spending remains strong and the labor market continues to hold up. On the other hand, housing activity is cooling and inflation pressures haven't fully gone away. Looking ahead, investors will continue watching inflation data, central bank policy decisions, and whether the economy can maintain its momentum in the months ahead. And as always, we'll be keeping an eye on it and bringing you the latest updates. I'm Buffy the Rate Slayer. Please like this video, share, and subscribe to the channel. Thanks for watching. Have an amazing weekend on purpose. Buffy, out.